It feels like everyone these days is looking for that one thing, a second income. And yeah, some people freelance, some start a side business, but a whole lot of others are quietly building their wealth in the share market. But let's be real. For most of us, the stock market is this big, confusing thing we hear about but don't really get. Well, today we're going to change that. Let's dive in and clear up the confusion for good.
So what's the deal with it, really? Is it just a fancy casino? Is it as risky as your uncle says it is? Or could it actually be one of the smartest side hustles you could ever have? In this explainer, we're going to tackle those questions head on. We're going to break down what the share market is, how it actually works, and how you can approach it like a pro, not a gambler.
Okay, so let's start from the very beginning, ground zero. Before we even think about making a single dollar, we have to understand the one core idea that the entire, massive global market is built on.
At its heart, it all boils down to one simple thing: a share. That's it. Just think of a share as a tiny, tiny slice of a company, like one little piece of a giant pizza. When a big company wants to grow, build new factories, hire more people, it can sell off these little slices to raise the money it needs.
And this is the part that blows people's minds. When you buy a share, you're not just buying some random ticker symbol on a screen. You are literally becoming a part owner of that business. It's like you're saying, hey, I like what you're doing, Apple or Google or whoever, and I want a piece of the action. You become a partner in their future.
So here's the payoff. There's a direct link between you and the company. If the company you own a piece of does really well, their profits go up, they expand, then the value of your little slice, your share, goes up too. Of course, it works both ways. If the company struggles, your share value is probably going to take a hit. Your fortunes are tied together. That's the game.
Okay, so we know what a share is. It's a piece of a company. But how do millions of these little pieces get bought and sold every single second of the day? What's the engine that makes this whole thing run? Let's pop the hood and take a look.
So companies list their shares on places called exchanges. You've probably heard of them, like the New York Stock Exchange or the London Stock Exchange. Think of these as giant marketplaces. But what makes the price of a share wiggle up and down all day? It's just one thing: good old supply and demand. That's it. If way more people want to buy a share than sell it, the price has to go up. And if everyone's trying to sell and nobody's buying, the price drops. It's that simple.
All right, let's get to the question I know you've been waiting for. How do you actually make money from all this? If you're a part owner, how does that turn into actual cash in your bank account? Well, there are basically three main ways it can happen. First, and the most common way, is something called capital growth. This is the classic buy low, sell high strategy. You buy a share, hoping the company grows over time, and then you sell it for more than you paid. Pretty straightforward. Second, you've got dividends. This is awesome. It's basically passive income. Some stable, profitable companies will share a bit of their profits with you, their owners, just for holding the stock. And third, there's trading, which is all about trying to make quick profits by buying and selling really fast.
Now, I have to put a huge, flashing warning sign on that last one. Trading is not a shortcut to getting rich. I'm serious. The hard, cold truth is that the vast, vast majority of beginners who try to be day traders end up losing money. It's a completely different skill set, and it's incredibly high risk.
And that brings us to a super important part of this whole conversation: the reality check. We've talked about how you can make money, but understanding the risks and, more importantly, the habits of people who win is what separates the smart money from just, wishful thinking.
And here's the thing that might surprise you. The biggest risks in the market usually aren't about the numbers of the charts. They're emotional. The things that cause people to lose the most money are just raw human feelings. It's the fear that makes you sell at the worst possible time, the greed that makes you buy into hype, blindly following some tip you saw online, and just plain old impatience.
This slide really says it all. The market becomes a super risky place if you treat it like a slot machine, if you're expecting to win every day and you're just chasing whatever's hot. But it becomes an unbelievably powerful tool for building wealth when you flip the script. When you invest for the long term, stay patient through the ups and downs, and spread your money across different companies. Diversify.
So let's just list out the classic traps to avoid, okay? Number 1, jumping in without learning a thing. Huge mistake. Number 2, listening to some random guru on social media. That's a recipe for disaster. 3, putting every penny you have into one sure thing stock. And the biggest one of all, expecting to get rich quick. It's just not how this works.
The investing legend Warren Buffett absolutely nailed it with this quote. He said, "The stock market is a device for transferring money from the impatient to the patient. It doesn't reward frantic energy. Over the long haul, it consistently rewards patience and discipline."
So let's bring this all back home. how do you actually turn the share market into that smart side hustle we talked about and not just a source of stress? It's all about playing the long game.
If you remember one single thing from this entire explainer, please let it be this. This isn't about quitting your job to stare at charts all day. The goal isn't quick money, it's smart money. It's about putting your money to work for you, steadily, over many years.
When you use it the right way, the share market is one of the most powerful tools ever invented for building real, long-term wealth. It's a proven way to create that second income stream we all want, through growth and those dividends we talked about. And, this is a big one, it's one of the best ways to protect your hard-earned savings from being eaten away by inflation.
At the end of the day, the share market isn't magic. It's not some exclusive club for the rich. It's a tool, a powerful one for sure, but just a tool. The knowledge is out there for anyone who wants it. So the real question isn't whether the market works. The question is, will you take the time to learn how to use it?